Prologis is really well known for being a real estate investment trust that's focused on warehouses, logistics, and providing that infrastructure that companies like Amazon or other e-commerce companies, retailers that need warehouse space, manufacturers that need warehouse space, and would rather lease out some square footage versus building something that they're going to have to own and maintain. This business has been a really good company that partners with all these other companies that are doing logistics, distributing product around the country. Its stock price is only up 19.74 over the 5 year. For a period of time in 2021. It really flourished, but it hasn't done much after that. When we look at the market cap, it's 119 billion. This is the second most valuable stock I'm going to cover in this video. Their dividend rate is good at 3.22. Analysts think it's fairly priced, actually priced slightly above its current value based on earnings per share. The company is growing nicely, although they hit kind of a wall of growth in 2024. They had terrific growth as we came out of COVID. Of course, a lot of distribution happened back then, and supply chains had to change for two reasons. Like, I guess they were both COVID related. COVID created supply chain constraints, issues, shortages, and then businesses decided we need to carry more inventory to try to avoid that in the future. We don't want to get caught without enough inventory to satisfy demand. So 15 analysts cover it. And again, when we look at these real estate investment trusts, we're not going to see a broad range of price targets. They're going to be around a particular grouping, showing that there should be less volatility in a stock like this. The revenue growth looks good in future years, although it's going to be single digit, just consistent growth. And the profitability is going to be approximately double its growth rate, which is very good. The P ratio is not great. 46 is expensive, but it's moving down to 32 over time. It still is expensive. This is not a high growth company. It pays a nice dividend, but I think the PE ratio is a bit expensive. I did the calculations of what Prologis stock is worth, and their stock is priced 9% too high if I look at the net present value of dividends they're paying. And when we look at their key ratios, when we look at price to funds from operations, it's not all that exciting. 21 is in the middle of the pack, but it doesn't lead in that category. Net asset value per share, again, middle of the pack. It could be higher. We would want the number to be higher. And price to book is fairly good. It's in fourth place or third place, if I read this correctly. So Prologis is not really jumping out as a great investment opportunity for me. It's right in the middle of the pack and probably isn't going to make the short list of stocks that I would want to buy.